Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market update for Thursday, March 3rd. Global equities are broadly higher as oil prices drop back towards $101 a barrel. And stocks on Wall Street opened with solid gains, helped by some positive economic data. 368,000 Americans applied for first-time unemployment benefits last week, 20,000 fewer than the week before, and the lowest level in nearly 3 years. Economists had been expecting the number to rise. Overall, jobless claims have fallen 27% since last August, which indicates a modest improvement in hiring and fewer layoffs. The news comes ahead of tomorrow's big government report on the labor market. Economists expect that U.S. employers added about 180,000 non-farm jobs last month, and that the unemployment rate ticked up to 9.1%.
The economy is also in focus across the Atlantic after the European Central Bank left its key interest rate unchanged at a record low 1%. The decision was no surprise, but investors are reacting to the comments by ECB President Jean-Claude Trichet, which followed the announcement. Trichet took a more hawkish stance against inflation in his monthly news conference in Frankfurt. He said that rising prices for energy and other raw materials are adding to price pressures, and that, quote, strong vigilance is warranted. When the central bank has used similar language in the past, it has indicated that a rise in interest rates is coming. Trichet said that a rate hike at the ECB's next policy meeting in April is possible but not certain, and will depend on incoming data. In response, the euro has turned solidly higher against the U.S. dollar.
On the corporate front, it's all about the retail sector today. Chain stores are reporting their February sales figures, and the results are mixed. On the plus side are high-end retailers and department stores. Saks posted an increase in same-store sales of more than 15%, pushing that stock up nearly 5% in early trading. Macy's, Nordstrom, and JCPenney also reported solid results. Meanwhile, limited brands topped expectations with a 12% jump in sales, and shares of sportswear brand Zumiez are soaring 7% after its results. But on the minus side are some of the industry's biggest names. Gap's sales fell 3%, a bigger drop than expected. And sales at Target rose just 1.8%, in line with the company's estimate, but below Wall Street's target. Target shares are dropping about 1% on the news.
Another retailer is in the news for a different reason. Family Dollar stores rejected a $7.6 billion buyout offer from Trian Group, claiming the bid significantly undervalues the company. The discount retailer said that a sale is not in the best interests of shareholders. But shareholders may not agree. Family Dollar is falling about 2% right now. Meanwhile, H.J. Heinz is moving to the upside in early trading. It reported a 20% increase in quarterly profit and said it's buying an 80% stake in a Brazilian food company. And finally, keep an eye on U.S. Airways. The carrier reported a 4% increase in total traffic and said that unit revenue rose enough to offset higher fuel costs. Shares of U.S. Airways are jumping more than 7% on the news. That's the latest from Weiss Research. Have a great trading day.